Salam, everybody. This is Investor Sheikh back at it again with another video. And this week's halal stock pick of the week is Procter and Gamble, ticker symbol PG. Stock price is at $131.18. It has a $321 billion market cap. It pays an annual dividend of $3.21. The 52-week low is 108.59 and the high is 145.11. PE ratio is 23.06 and the earnings per share is $5.34. So a description of the company is that the Procter & Gamble company provides branded consumer packaged goods to consumers all over the world. It operates in 5 segments: beauty, grooming, healthcare, fabric and home care, and baby, feminine and family care. So the beauty segment sells conditioners, shampoos, styling aids, treatments, deodorant, skincare products. The grooming segment sells shaving accessories like blades, razors, electric razors, and epilators. The healthcare segment sells toothbrushes, toothpaste, oral care products, gastrointestinal, respiratory, vitamins, minerals, supplements, pain relief, and other personal healthcare products. The fabric and home care segment provides fabric enhancers, laundry detergents, dish care, and surface care products. The baby, feminine, and family care segment specializes in baby wipes, diapers, adult incontinence and feminine care products, as well as paper towels, tissues, and toilet paper. And the company sells its products through various methods, such as mass merchandisers like Target, e-commerce like Amazon, grocery stores like Kroger and Albertsons, membership club stores like Costco and Sam's Club, drugstores such as Walgreens and CVS, department stores, distributors, wholesalers, baby stores, specialty beauty stores, pharmacies. So a lot of stores are going to sell products under the Procter & Gamble umbrella. So this is similar to my previous videos that covered stocks such as Johnson & Johnson and Kimberly-Clark. They basically sell a variety of brands that fall under the Procter & Gamble umbrella. And here are some examples of the products. You see Pantene, Bounty, Gillette, Pampers, Charmin, Tide, Febreze, Oral-B, Head and Shoulders, Dawn, Gain, Crest, Downy, NyQuil, and Olay. So I'm pretty sure if you've been to the grocery store or Walmart, you've definitely seen these products on the shelves. If you haven't, you've definitely been living under a cave. So essentially, Procter & Gamble specializes in these products of various brands. So 9 times out of 10, if you're going grocery shopping, you may have one of those products in your shopping cart. So looking at the stock price, it's at $131.30. So looking at how it has performed in 2021, it's currently at a discount because it was at the 140s back in January. It dipped as low as 122 back in March, and it started going back up, and it's back in the low 130s. However, if you look at how it has been growing over the past 30 years, it has been going up consistently year after year. I mean, sure, there's up and downs, but in the long term, this stock is heading upwards in the long term. Now, mind you, there may have been some stock splits along the way, which is normal for a lot of these stocks that have been around for decades, such as Apple or Microsoft. Will have a stock split eventually. So, but then if you look at the past year, it was as low as 117 due to the pandemic, and then went up to the 140s, dipped again, and then went back up. So you do notice some short-term volatility involved with this stock, but nonetheless you're going to experience long-term growth. This is a dividend paying stock, and this is a company that is growing over the long term. And considering that they sell various products, this is an essential company. And as you know, any company that sells essential products or services is a stock worth owning, in my opinion. Now, I wouldn't own this stock for, a swing trade, but rather a long-term hold. Like, this is a stock that I would be comfortable holding for 5 to 10 years, basically. So looking at the financials a little bit deeper, the revenue has been pretty big, but has been constant year after year. And then you also see the earnings take a dip from 2017 to 2019. And in 2020, you see the earnings increase. So looking at the quarterly, the revenue is constant and the earnings have been pretty volatile. So analysts are saying it's between a buy and a hold, with price targets as high as, excuse me, alhamdulillah, price targets as high as 168 and as low as 119. So, in a way, you may start to see the stock price go as high as the 140s or the 150s within a few months later in the year. So looking at the financials a little bit deeper, they are profitable, as their net income is $14.2 billion. Note that the numbers are in thousands. So $14.2 billion in net income this past year. So this company is profitable. And it should be, considering that they sell various products that people are buying all over the world. It's without a doubt that this company has to earn a profit. Why wouldn't they? And you look at the balance sheet. This is a pretty hefty company, as it has assets of $120 billion. And the liabilities are at $73.8 billion. So the assets are significantly higher than the liabilities. So that's a green flag right there. And as I mentioned earlier, this is a dividend growth stock that pays a dividend quarterly. So let's take a look at how the dividend has performed. So I stated that they currently pay a dividend of $3.21. So if you were to look at the years prior, in 1993, they paid an annual dividend of 29 cents. And that's if you purchased the stock back in the 90s. And as I scroll up, you'll see that the annual dividend has increased considerably well. Every year you see the dividend go up and up. So in 2020, the annual dividend broke $3 for the first time. And considering that they've been paying an increasing dividend year after year, this is a dividend aristocrat. Any company whose dividend has increased consecutively for 25 years is considered a dividend aristocrat, and Procter & Gamble is an example of that. So all in all, with these products and the increased dividend growth and the increased growth of the stock price over the long term, this is a stock worth owning if you intend on holding it for multiple years. Now, this is a stock that I would probably recommend you add to your Roth IRA or traditional IRA so that you can keep it for the long term. Now, the growth is going to be slow. As I mentioned for other companies that hold multiple brands like Johnson & Johnson or Kimberly-Clark, this isn't a stock that will make you rich in the short term. But if you hold on to it, you will earn passive income just for holding a position in this stock. So currently, I do plan on purchasing shares of PG and putting it in my Roth IRA. And I would like to get some shares in the 120s if possible. If not, the low 130s is enough for me. Now, as always, I'm not a financial advisor, so please do not buy this stock simply because I'm talking about it. Please do your research, and if you like what you see, consider adding this stock to your watch list. This is Investor Shake. Check it out. Follow my Instagram at Investor Shake.